Mr. AG here. Asian guy bringing you the complete picture. Can silver hit $200 this year? That is the question I keep getting asked. And I understand why. Silver hit a new all-time high of more than $121 per ounce in January. Then it crashed more than 30% in a single day, the worst single-day performance in decades. Now it is trading around $88 per ounce, a steep decline from the recent highs. But still up 12% year-to-date, which is better than the S&P 500 and its gains of around just 2%. So what is going on? Can silver still reach $200? What would have to happen for that to be possible? And is now the right time to be buying, or should you be waiting for more clarity? Let me break down everything you need to know. Before we dive in, let me be absolutely clear about something. I do not sell courses. I do not sell signals. I do not sell mentorships. I do not have any paid products of any kind. I share this analysis because so many of you have told me this content helps you understand what is really happening in markets, see both sides of every situation, and make more informed decisions. That is why I do this. I present the data. I show you what the bulls are seeing and what the bears are seeing, and I let you decide. Now let me get into what actually happened and where we might be headed, because the year is barely a month old and there has already been plenty of volatility. Drop a comment right now. Where are you watching from? What country? What city? I want to see how global this community has become. And while you are down there, tell me honestly, do you think silver can hit $200 this year? Yes or no? I want to see what this community believes. Let me know in the comments. Now let me walk you through what happened, because understanding the crash helps you understand the opportunity. The price of silver crashed more than 30% on January 30th. In a single day. Let me repeat that because it is extraordinary. More than 30% in one trading session. This was silver's worst single-day performance in decades. Not years, decades. We have to go back to the 1980s to find a day this bad for silver. What caused this historic crash? The reason for the sudden quick decline was President Trump's announcement of his pick for the Federal Reserve's next chairman, Kevin Warsh. Now, this might seem like a strange catalyst for a precious metals crash, but when you understand the dynamics, it makes perfect sense. While the Warsh announcement seemed to be one that might calm the overall market with respect to the Fed's independence, and it helped the US dollar rally, it had the reverse effect on the price of silver. Here is why. As investor concerns grew about who would replace Jerome Powell, silver prices rose. The uncertainty drove safe haven buying. People were worried about Fed independence. They were worried about political pressure on monetary policy. They were worried about potential currency debasement. All of those fears pushed money into silver and gold. Then Warsh was nominated. He is perceived as someone who will defend the dollar, someone who favors tighter monetary policy, someone who will resist political pressure on the Fed. With what appears to be greater stability coming to the Federal Reserve, investors started dumping the safe haven asset. The uncertainty premium came out of the price, and it came out violently. This tells us something very important about what has been driving silver prices. It was not just industrial demand. It was not just solar panel growth. It was not just supply deficits. A significant portion of silver's rally was driven by fear. Fear about the Fed, fear about the dollar, fear about the economy. When that fear reduced, even temporarily, the price collapsed. Let me ask you something. What time is it where you are right now? Morning? Afternoon? Late night? Drop it in the comments. I'm curious when people around the world are watching this analysis. Are you catching this before markets open to prepare? After markets close to understand what happened? Let me know. Now let me address the current situation. As of early February, silver was trading at around $88 per ounce. That is a steep decline from the $121 high. But let me put this in perspective, because the numbers tell an interesting story. Even with the volatility, even with a 30% crash, the iShares Silver Trust ticker symbol, SLV, is up over 12% to start the year. Compare that to the S&P 500, which is up around just 2%. Silver has outperformed the stock market by a factor of 6 in 2026, despite the crash. Let me repeat that. Silver is up 12% year to date. The S&P 500 is up 2%. Which asset is actually performing better? This is the perspective that gets lost in the crash headlines. Yes, silver crashed. Yes, it was violent. Yes, it was scary if you bought at the top. But the overall trend for the year is still strongly positive. The question is whether that trend continues or whether the crash was the beginning of something worse. Now let me address the big question. Can silver hit $200 this year? Let me give you a balanced analysis because I think you deserve honesty, not hype. The case for silver reaching $200 rests on several factors. First, retail investor enthusiasm. There is significant interest from retail investors to load up on silver stocks and related investments. The silver stacking community is active. The silver squeeze narrative is alive. Social media continues to drive attention to silver as an investment. And we have seen what retail investors can do when they coordinate their buying power. The collective power they hold should not be underestimated. Second, economic uncertainty. Concerns about the economy may lead to growing demand for safe haven assets. We are in an environment where trade tensions are elevated, geopolitical risks are high, fiscal deficits are expanding. All of these factors can drive safe haven buying. Third, the potential for the Warsh effect to reverse. If the nomination falls through, if policy concerns return, if inflation reaccelerates, the fear premium could come back into silver. The same dynamics that drove silver to 121 could repeat. Fourth, the industrial demand story remains intact. Solar panel installations continue growing. Electric vehicle adoption continues. Electronics manufacturing continues. The green energy transition requires silver. This demand is not going away regardless of short-term price volatility. For these reasons, I would not be surprised if silver hit $200. The potential hype and excitement from retail investors, combined with genuine economic concerns, could create the conditions for that kind of move. But being possible and being likely are two different things. Quick question for the community. Have you been adding to your silver positions during this volatility? Or have you been selling or waiting on the sidelines? Drop your approach in the comments. I want to know how this community is handling the current situation. Now let me give you the other side. The case against silver reaching $200. And this case is just as strong. First, silver has been extremely hot for the past several months. A slowdown is arguably far overdue. Markets do not move in straight lines. They breathe, they consolidate, they correct. After a move from much lower levels to $121, the market needs time to digest those gains. Even in bull markets, significant pullbacks and consolidation phases are normal and healthy. Second, the Warsh nomination changes the narrative. If the Fed is perceived as more independent, more hawkish, and more committed to defending the dollar, that removes one of the key tailwinds for precious metals. The fear trade that drove silver higher may not return at the same intensity. Third, the 30% crash may have damaged investor confidence. When you see a 30% crash in a single day, that scars people. Retail investors who bought near the top are now underwater. They may be reluctant to add more. They may even sell on rallies to reduce their losses. This damaged confidence takes time to repair. Fourth, the dollar remains relatively strong. A firm dollar is a headwind for precious metals. If the Warsh Fed defends the dollar as expected, that headwind could persist for an extended period. Fifth, alternative investments are competing for capital. Bitcoin and other assets are also vying for safe haven and speculative money. Every dollar that goes into crypto is a dollar that is not going into silver. The competition for speculative capital has never been higher. For these reasons, I would not expect silver to hit $200. Simply because of how hot silver has been in the past several months and how overdue a slowdown is. The base case is probably consolidation and range-bound trading rather than a moonshot to 200. About 60% of you watching right now are not subscribed to this channel. If this analysis is helping you think through the silver question with both the bullish and bearish perspectives, consider hitting subscribe. I do not do hype. I do not do fear-mongering. I give you both sides and let you make your own decisions. If that approach resonates with you, subscribe. Now let me explain what would have to happen for silver to actually reach $200, because understanding the conditions helps you monitor whether they are developing or not. Condition 1, a reversal in Fed expectations. If Warsh's nomination fails, or if he proves to be more dovish than expected, or if economic conditions force policy easing, the fear trade would return. Uncertainty about Fed independence was a key driver of silver's rally. That uncertainty would need to return for another leg higher. Condition 2, a weakening dollar. Silver is priced in dollars. When the dollar falls, silver becomes cheaper for international buyers and tends to rally. For silver to reach $200, we would likely need to see meaningful dollar weakness. That could come from rate cuts, fiscal concerns, or a shift in global capital flows away from U.S. assets. Condition 3, continued retail investor enthusiasm. The silver squeeze narrative would need to maintain momentum. Social media attention would need to remain high. New retail buyers would need to keep entering the market. The collective power of retail investors could push silver to extremes that fundamentals alone would not justify. Condition 4, supply disruption or industrial demand spike. Any significant supply disruption from major mining regions could tighten the market dramatically. Or an acceleration in industrial demand from solar, EVs, or electronics could overwhelm available supply. These physical market dynamics could support much higher prices. Condition 5, a major geopolitical crisis. War, trade conflict escalation, or another global shock could drive safe haven demand to extreme levels. In crisis conditions, precious metals often spike to levels that seem irrational in normal times. A $200 silver price would likely require some element of crisis premium. If multiple of these conditions occur simultaneously, $200 becomes genuinely possible. If none of them occur, silver probably consolidates or even declines from current levels. The question is which scenario unfolds, and that depends on events that are largely unpredictable. Let me ask the community directly. Which of these conditions do you think is most likely to happen? Fed uncertainty returning, dollar weakness, retail enthusiasm sustaining, supply disruption, geopolitical crisis? Drop your view in the comments. I want to see what this community thinks is most probable. Now let me talk about the iShares Silver Trust specifically, because this is how many investors get silver exposure. SLV is an exchange-traded fund that holds physical silver. When you buy SLV, you're getting exposure to the silver price without having to store physical metal yourself. The fund has been up over 12% year to date, even with the crash. That outperformance versus the S&P 500 is significant. It shows that despite the volatility, silver has been a better place to have money than broad U.S. stocks so far this year. But there are important considerations about owning SLV versus physical silver. SLV is convenient and liquid. You can buy and sell it like a stock. There are no storage concerns, no security concerns, no dealer premiums. But you are holding paper that represents silver, not actual metal in your possession. In a true crisis scenario, some investors prefer physical metal they can hold. For most investors, SLV can be a good investment to hold in a portfolio as a way to diversify. But you should be comfortable with the volatility that can come with it. As we saw in January, silver can move 30% in a single day. That kind of volatility is not for everyone. Position sizing matters enormously. Putting a large percentage of your portfolio into silver and then watching it crash, 30% overnight, is an experience that many investors cannot psychologically handle. What country are you watching from right now? Drop it in the comments. I want to see the geographic spread of this community. And tell me if you prefer SLV or physical silver. I'm curious about the community's preferences. Now, let me address investor psychology because I think this is crucial for navigating silver right now. The price action we have seen reveals something important about what has been driving silver. The fact that silver crashed when Fed independence concerns eased tells us that a significant portion of the rally was driven by fear rather than fundamentals. When the fear reduced, the price collapsed. This does not mean the fundamentals are bad. Solar demand is real. Supply deficits are real. Industrial applications are real. But it tells us that the price had incorporated a fear premium that evaporated when the narrative changed. Understanding this psychology helps you make better decisions. If you believe the fear premium will return because economic and political uncertainty will intensify, then buying this dip makes sense. If you believe the Warsh nomination has durably reduced uncertainty and the fear premium is gone for good, then caution is warranted. Neither view is obviously correct. The future is uncertain. Events could break either way. That is why I always present both sides and let you decide based on your own assessment of probabilities. Let me also address the question of timing. Even if silver eventually reaches $200, the path there matters. If it takes 5 years of consolidation before that move happens, buying now might not be optimal. You could deploy capital elsewhere and return to silver when the setup is cleaner. Alternatively, if the move happens quickly, say within the next 6 to 12 months, then waiting for a cleaner setup might mean missing most of the move. Timing is the hardest part of investing and trading. There is no perfect answer. You have to make decisions with incomplete information and accept that you might be wrong. My general framework is this. If you have a long-term view and are comfortable with significant volatility, adding to silver positions during fear and uncertainty can be rewarding over time. If you are shorter-term focused and need more predictable returns, silver's current volatility makes it challenging to position confidently. Now, let me give you the complete bearish case because you need to understand all the risks before making decisions. The bearish case starts with the historic crash itself. A 30% single-day decline is not normal. It signals something was very wrong with positioning. Leverage longs got wiped out, confidence was damaged. It will take time for the market to heal from that kind of move. The Warsh nomination represents a genuine shift in narrative. If the Fed is going to be more hawkish and more independent, that is structurally negative for precious metals. Higher real rates and a stronger dollar are headwinds that could persist for an extended period. The rally was overextended. Silver went from much lower levels to $121 in a relatively short period. That kind of parabolic move is rarely sustainable. Mean reversion after parabolic moves is common. Silver could spend months or even years consolidating below previous highs. Retail enthusiasm can fade. Social media attention spans are short. If silver chops sideways for months, the silver squeeze narrative loses energy. New retail buyers stop entering. The fuel for the rally dissipates. Industrial demand might slow at high prices. If silver stays elevated, manufacturers will work harder to reduce silver usage or find substitutes. Solar panel companies will optimize their designs to use less silver. This demand destruction at high prices creates a natural ceiling. Competition from other assets is real. Bitcoin, gold, real estate, stocks. There are many places for investment capital to flow. Silver is not the only game in town. It has to compete for attention and capital. That is the bearish case. It is substantial and needs to be taken seriously. Now let me give you the complete bullish case, because the bears are not telling the whole story. The bullish case starts with the year-to-date performance. Silver is up 12%, while the S&P 500 is up only 2%. Despite the crash, silver has been the better investment so far this year. The trend is still positive on a year-to-date basis. The crash was driven by a single event that may not have lasting power. The Warsh nomination reduced uncertainty temporarily, but policy uncertainty never truly goes away. New concerns will emerge, new fears will develop. The safe haven bid for silver can return. The fundamentals remain intact. Solar installations continue growing. EV adoption continues. Electronics manufacturing continues. These demand drivers are not affected by who chairs the Federal Reserve. The physical market remains tight. Retail investor interest is genuine and growing. The silver stacking community has expanded significantly. Social media attention to silver is at all-time highs. This is a structural shift in how retail investors think about silver, not just a temporary fad. Historical precedent supports higher prices. In previous precious metals, bull markets, silver has reached extreme levels that seemed impossible at the time. The 1980 spike, the 2011 spike. Silver has shown it can move to levels that defy normal valuation logic. The macro environment supports hard assets. Deficits are expanding. Debt is growing. Currency debasement concerns persist. These long-term factors support precious metals ownership regardless of short-term Fed nominations. The 30% crash may have created a buying opportunity. The weak hands have been shaken out. The leveraged longs have been liquidated. The remaining holders are more committed. The foundation for the next move may be stronger now. Let me ask you directly. Based on everything I have shared, do you think silver goes higher or lower from here? And do you think $200 is possible this year? Drop your prediction in the comments. I genuinely want to know what this community believes. Now let me talk about practical positioning, because understanding the analysis is different from knowing how to act on it. If you believe silver is going higher and want exposure, you have several options. Physical silver gives you direct ownership with no counterparty risk. SLV gives you convenient liquid exposure through your brokerage account. Mining stocks give you leveraged exposure to silver prices. Each approach has trade-offs. Physical requires storage and has dealer premiums. SLV has expense ratios and counterparty elements. Miners have operational risks beyond just the silver price. Position sizing is critical regardless of which approach you choose. Silver can move 30% in a day. If you put 50% of your portfolio in silver and it crashes 30% overnight, your entire portfolio is down 15% before you even wake up. That kind of volatility requires modest position sizes unless you have very high risk tolerance. Time horizon matters enormously. If you're playing for $200 within months, you need to be right about both direction and timing. If you're accumulating over years with the view that silver will eventually reach much higher levels, short-term volatility matters less. Match your positioning to your actual time horizon. Have a plan before you need one. Know at what level you would add more. Know at what level you would reduce exposure. Know what events would change your thesis. Having a plan prevents emotional decision-making when prices are moving fast. 3 key takeaways, and then we are done. Number 1. Silver hit an all-time high of more than $121 in January before crashing over 30% in a single day on the Warsh nomination. The crash was silver's worst single-day performance in decades. Despite this volatility, silver is still up 12% year-to-date versus the S&P 500 at only 2%. The crash was driven by reduced Fed independence concerns, not fundamental deterioration. This tells us a significant portion of silver's rally was fear-driven rather than purely fundamental. Understanding this psychology helps you anticipate future moves. Number 2, silver reaching $200 this year is possible but not expected. The conditions required would include a return of Fed uncertainty, meaningful dollar weakness, sustained retail investor enthusiasm, supply disruptions, or major geopolitical crisis. If multiple of these conditions occur simultaneously, 200 becomes achievable. If none occur, consolidation or decline is more likely. The base case is probably range-bound trading as the market digests the massive gains already achieved. A slowdown is arguably far overdue after how hot silver has been. Number 3, positioning in silver requires accepting significant volatility. Whether through physical metal, SLV, or mining stocks, silver can move dramatically in short periods. Position sizing should reflect your ability to withstand 30% moves. Time horizon should match your strategy. Long-term accumulators can use volatility to add at better prices. Short-term traders need to respect the unpredictability. The iShares, Silver Trust, can be a good diversification tool but requires comfort with volatility. Let me leave you with this thought. The question of whether silver hits $200 is less important than the question of whether you're positioned appropriately for whatever happens. If you have modest silver exposure as part of a diversified portfolio, you benefit if silver soars and are protected if it crashes further. If you are heavily concentrated in silver with leverage, you could make a fortune or lose everything. The goal of investing is not to predict the future perfectly. It is to position for a range of outcomes while managing risk. Silver could go to $200, silver could go to $50. Both are possible. The question is how you position for uncertainty. I would not be surprised if silver hit $200 given retail investor power and economic uncertainty. But I also would not expect it because a slowdown is overdue. That balanced view is not exciting. It does not make for viral clips, but it is honest. An honest analysis serves you better than hype in the long run. Do your own due diligence. Understand the risks. Be accountable for your own decisions. Have a clear plan and know your time frame. Silver can reward patience and punish FOMO. Define your time horizon. Size your positions intelligently and decide whether you are playing the tactical swings or the strategic multi-year thesis. Drop your thoughts in the comments. Where are you watching from? What is your silver price prediction for the end of 2026? Do you think $200 is realistic? I read every comment and they help shape what topics I cover next. The volatility continues, the debate continues, the opportunity and risk both remain. Stay sharp, stay informed, and make decisions based on data and logic, not fear and emotion. This is Mr. AG, Asian Guy, bringing you the complete picture. I will see you in the next one.